Hello, everyone. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. I've got about 3 or 4 different chat windows here. Chris has got the Zoom call going. He's learning how that European interneting stuff works again. So congratulations to Chris. Looks like he's pulled it off here like a boss. Of course, shout out to his handlers. He has 2 handlers over there in Europe now. I think they did a good job. They got him at least settled in. So, hitting the ground, being able to produce one of these shows on such short notice shows that he's in good hands. So great to see you and hear that you made it one piece over the puddle.
It was a smooth trip.
Chris,
So I was a smooth trip. I was received with warm greetings yesterday. It's been a fun ride. I will say that. Glad to be
awesome,
here.
awesome, good to see, good to hear. So, and if anything in the future episodes, maybe we can even get Andrea to participate a little bit. And he does some fantastic work with celestial cycles. And man, I think if I'm not mistaken, he had just an absolutely incredible trade in crude oil off a celestial pivot last year, if I remember correctly. And by all means, if you're watching these weekend shows or if you're watching afterward, we've introduced guest hosts Wednesdays and Fridays through the daily brief extra session. I think we call it like the after party, where we just sit and talk on the site. And we've had just a fantastic lineup. One of our level 3 concepts that we teach in the education program, harmonics. We had Stephen on the program recently. He did a fantastic presentation. We also had Zach recently come on, talk a little bit about option spreads, which was really received well. So super sales pitch for the level 3 program coming from those two. Marat was on the call. He's our level 2 instructor. Shartoshi, of course, always coming on. And I mean, he's just awesome anyway. So it's just great to see we kickstarted this initiative to try and get more voices on the daily brief broadcast. And it seems to be being received really, really well. So super stoked about that. Right off the bat, TRI is not just about the Beamish anymore. Phew, thank goodness. Too much pressure. In fact, our community of traders, I'd say Stephen is a way better trader than I am. I'd say Marat's ready to go to Wall Street if he wants to. I don't think Marat wants to go to Wall Street, though. Shartoshi, he's in California. He can take a trip up to Silicon Valley and sell his services very, very easily up there. But he already has a pretty good setup down in the SoCo. So anyway, and Chris says here, Sharky and Cole, can't wait. I've been talking about Cole and his celestial work. So maybe we could dovetail Cole and Andrea, and maybe even get Shane around. Wouldn't that be cool? That would be a cool Friday special or Wednesday special. Have the 3 of them just talk celestial stuff. Anyway, so the point of the matter here, TRI is progressing really nicely, really maturing well. Of course, we've got the dashboard up and running, firing on all cylinders. Still kind of working out the kinks. But nonetheless, I think usable information. I did find it interesting that when we're looking at the broader investing universe, things like the S&P 500 and the broader stock market, they're like, yeah, okay. It is interesting when we just look at our weekly commodity trend survey matrix. I mean, where is the buying opportunities? And it seems to me to be there's a hell of a big number here in this category, this crypto top 30 category. And actually even issues that are actually trying to spit out weekly moving average setups that are substantially below their 50% levels. And sure enough, holy moly, we have one site, gentlemen, here. I don't know whether I can show you or not, but it is our lounge. Oh, actually, here we have and actually, we're moving to a new chat interface in the not too distant future. So we are going to, we've had enough of this rocket chat nonsense. But I think it's Discord that we're moving to. It's one of those. But anyway, what I love is waking up and, I teach people the basic concepts, buy an asset, try and take appropriate risks, try and understand there's fundamental reasons to justify you acting, all that kind of fun stuff. And then, of course, when these assets do pop, it's important to pay yourself. This gentleman here, Julian, I think he's another Romanian. It's remarkable how many these Romanians, I must have Romanian blood. Did you kind of feel like we were related, Eddie, when you were visiting with me in Portugal? Because I don't know what it is. I get along with these Romanians so well, and they seem to like my message. But Julian is another Romanian, and this guy's just killing it. I mean, it's work. And then I do this show with Paul on Wednesdays, and he's killing it. And of course, the guy who actually does the write-ups, and I'm getting off topic here, but the gentleman who does the write-ups for our daily briefs, and I think he does a fantastic job. Thank you very much, Rares. He's also Romanian. I mean, it's remarkable. I don't know what it is about these crazy Romanians. Oh, but he's part Tanzanian too, right? Or I am? Maybe that explains it. Anyway, so I got to say, fantastic to see the site members just having just a ball in this crazy crypto market. And it's a lot of the little ones. And if anything, the message I think for you guys is right now is that this is actually pretty darn cliche what's going on in the junior part of the market. This is what's called the January effect. And usually what ends up happening in the stock market is the junior market vastly outperforms because it's sort of playing catch up because everybody was sitting on these assets into tax loss selling season. Now, I might argue that actually the whole darn crypto market was being sat on into the year end, and it almost feels like it's just like a springboard. Everything's just springing back to life, especially all these little ones. And actually, it was really cool. This was something that really jumped out at me over the weekend and last week and stuff. Because it's the new year and we should start seeing, capital inflows. The question really is, as I try to tell people, do you see weekly W's, weekly W's, weekly W's? So it's sort of like the hallmark that if we're not at the bottom, we're pretty darn close. And actually, I even put out a request on the site. Some people are like, yeah, Brian, here's my list. Other people are like, all right, don't look at my list. I'm kind of like the open book kind of guy. I mean, it doesn't really matter. If you're long a good story and it's got a W, well, then what the hell, man? Rock and roll. I mean, it's not going to make a difference whether you tell somebody else, hey, there's a weekly W working in this thing. Maybe take a look at it. So I put the call out on the site, now's the time. If you got weekly W's, let's take a look at them. Let's see whether we should start throwing some money at this stuff. Of course, it's always a good idea not to chase. And, here's a good example. This guy here, Stargate. I mean, gee whiz, I wish I had been paying attention about a few days ago when we saw that daily breakout. Interesting how this is becoming like a weekly bottom, although it's not really the best looking bottom. Probably the big weekly W comes in on a breakout through there. But the point being that I'm seeing a lot of this kind of action right now, big green dildos, all that kind of talk. We're not allowed to chase, so you certainly can't come in and buy that there. You can see where the W is, but that doesn't mean you can't start building shopping lists and saying, all right, when the euphoria eventually wears off, and it usually does, and then we'll just simply throw on reload zones. And interestingly enough, I mean, you see this all the time in trading. There's really nothing new to this. The reload zone is just going to so happen to line up with things like tags of this trend line from the other side when sort of calmer heads prevail. And also too, we'll come back into moving average support, all that kind of stuff. Wyckoff checks, you probably heard that. On Wednesday, we like to call them the Benkoff checks. Actually, I would every day we like to call them Benkoff checks. Our Wednesday show co-host Ben, he loves those. So anyway, point here is that we're in this kind of environment. So I just basically put the open call on the site. Please, people, tell me if you see weekly W's, because I want to make money from this stuff too, just like all of you. There's no difference. I'm just a speculator, just like all of you. One gentleman, want to give him a shout out, the Matador. That's his name on the site. No idea what the hell these people's real names are. But what the hell, if I ever run into him, I'll know what to call him, the Matador. Anyway, he had a list here, and I mean, this is a great analogy of just hunting W's. As you can see, I've even sort of said like, oh my goodness, I can't believe how strong these markets are. I want to buy, I want to buy, I want to buy. This guy's probably going to rally up into this 70, 80 cent area. And that wouldn't surprise me too. Big fat round number, $1 is probably going to oscillate around up there. But gee whiz, look how powerful that chart is. I got a green dot here, which means that I can work a bid. I could buy, but unfortunately I'm not allowed to chase. I can't buy up there. But wow, what a good looking trade. Blue means that actually it was at a weekly breakout level and I could actually go and buy. And I did actually go and buy a little bit of this because the other day it had pulled back against these highs here and actually came into this original double bottom level. And I was like, I can buy that. So I did go and buy it. And I said that should this thing turn back up into a weekly, this is an interesting one because there is the weekly W, and of course, Brian loves his weekly W's. But the moving averages haven't turned up yet. So what's probably going to happen here is you're going to get some sort of spike, and then there'll be the subsequent pullback, and that will cause the fast moving average to cross the slow. And then on that event, reload zones, everything I showed you off of like that little Stargate name, then I'll go and add to the position. But I can tell you, I love them weekly W's. And so this happened to be this gentleman's list. Some of these names I could participate in. Some I just don't have an account on KuCoin, for example, like this one. Actually, I don't think that's the one. There was one of these, I think it was Uno here. I mean, beautiful looking trade. And unfortunately, because it's KuCoin, I don't have an account on there. We were literally watching this thing breaking out here. And it was just like, oh, I want to work a bid, but I don't have an account there. And then all of a sudden, boom, it just popped like crazy. But this is get ready, folks. I mean, the interesting thing about all of this is that I couldn't stop people from buying way back up here. Couldn't stop them at all. Now, when I go out on the interneting and I say, hey, it's time to load up on this stuff, it's time to rock and roll, I don't hear anything from anybody. It's remarkable. And what's also interesting too is I hear a lot of talk that people are like, well, I'm not going to touch altcoins, shit coins, whatever you want to call them. Really, I don't really care. I mean, obviously chalk marks are the most important thing. You want to follow the chalk marks. If you see big fat weekly W's, then you go and do your due diligence, and you like the name, like the fundamental story, and it doesn't have a gazillion coins out, but got a relatively respectable number, and they've got something on the go. Away you go. What's interesting, of course, is that I work. Actually, this is it's interesting shout out. For fun. When I first got involved on TradingView back like almost 10 years ago now, there was a group of us that were sort of interested in Bitcoin. A lot of them were sort of like they had no idea. They were more sort of like social participants. Others were aspiring traders, and for some reason I still have the Google chat box going. And there's a few of them that sort of chimed in. They're off doing different careers and stuff, and actually not too. I don't even think they're still in Bitcoin, but there was one lady that was part of the group, and she actually referred Sjord to me, and it was a pleasure telling her that thank you for bringing Sjord into my life. And Sjord and I are still working together after all this time. So she got a kick out of that. That was kind of cool. Anyway, so there's your dovetail. Interesting. This is Sjord's sort of current sort of DeFi list that I've asked him to pick up some names, but he's also interested in a few names. So we're building that. So if you see one that's in orange on this list, it's a sort of a pseudo Sjord idea. And then also too, and actually I was quite pleased to find out that Sjord had actually been able to go and pick up this name, which I couldn't buy because it's all this DeFi. And this happens to be, think of this name as before the breakout. This gentleman was convinced me, hey, Brian, you should take a good look at this. And I'm damn pleased that I did. I'm long from here. We're calling this the Zulinski trade. Good old Zugi sticks. Very powerful move, I got to say. And again, I think half the reason why Bitcoin is rallying here is that I think a lot of people are seeing these very, very substantial moves. Keep in mind, this is more than a double. I'm going to be a little greedy on this, and I'm shooting for a good old Foggenbaum to sell my first whack. And hey, it's the plan that I'm running right now. It's no big deal. You can see how we have a bit of an A, B, C, D continuation pattern up here. And as I've said repeatedly in the past, this thing's got tons of room to move up here. So ultimately, I wouldn't be surprised just in the near term, probably over the next year or so, maybe into like the summer, that kind of thing. We get a pretty nice stab of the top of this trading range. So hugs and kisses to Zug, getting me long from there. That's perfect. That's exactly what traders are supposed to do. Anyway, and interestingly enough, even on a name like this, I would be more than happy if it decides to do big fat reload zone pullbacks and come back down to the original bottom and spit out more W's. I'll be more than happy to buy more of this. That's a good looking chart if I've ever seen one. So I still think that this is the kind of the market state right now. I will say something that did catch my attention, which is a little bit of a surprise, but what the hell? Markets are markets. The dominance has been jumping up quite dramatically here. I'm wondering, whether we're coming into actually upside objectives here. So if we do something along these lines. Here's the dominance, and I suppose you could make an argument, A to B, and then clone that, C to D. So I'm a little, Bitcoin's been rocking and rolling here. The algo actually kind of went sort of like, things are getting a little ridiculous. I think probably should hop off. That was like $1,000-$2,000 ago. So I think the algo was a little bit early. I had originally thought when I drew out this market symmetry study that we were probably going to do something along these lines, where it was just literally taking this market symmetry study as this is the middle of it right there. And looking for a rally, then a nice little consolidation, then a secondary push up here. And the market's just like, nah, I don't think so. I'm just going straight up. If anything, this is a perfect example. Don't get into the business of predicting the future. Number one, a month ago, if somebody had said there's going to be I don't know, what is that, 30% rally in Bitcoin in the next month, you better strap on. I don't think anybody would have believed you. Also too, and if anything, this is a little concerning. Sometimes I look at these and I go, this is a little too far, too fast. Kind of feels like that. I noticed that on this push higher here, we got a bunch of divergences all developing here now. So you can see this was sort of where I thought we were going to stall out. And notice on this latest push up into these levels up top here, we had less volume on the buy side. That's a little bit concerning. The moving averages, of course, this is a very fast, and it's not that as nearly as big of a move. So the moving averages themselves are going to go into a bit of a divergence. And of course, we got Willie nice and stupidly overbought here. So very dangerous market to come in on the buy side here. If you are long and you can just be patient and disciplined, you might just see the market just continues to work its way higher, although I'm skeptical. Color me skeptical. And if anything, the one thing that I'm worried about here is February 1st is the next official Fed date. And if you've been watching Fed policy over the past little while, the Fed, it just seems it almost seems cliche that the market discounts everything. So this will all zoom up higher. And you never know in the short term, as this image points out, we might rally right up into this 4669 level, the ABCD objective. That could very easily happen. I mean, and also too, looks like a nice little sort of low to high trend line. So these trend lines work very, very powerfully. There's a lot of reasons to look for the market to continue to push up into here. The only problem is that technically this move is getting weaker and weaker and weaker as we go up. The diverge, like this divergence hasn't even confirmed, but a lot of tops that I find, I suppose here is a good example of one. I thought, and that might even have been a Fed day. Hey, Chris, can you do me a favor and Google when was the last Fed day? I have a feeling it was there in November. It wouldn't surprise me if that was a Fed event right over there. And notice the divergence that developed through there. So I don't know. So big up on Bitcoin. I am running a trading plan that is nothing more than just an algo. And actually, where do I have that chart? Have it over here. 14th of December 13th, 14th, and before that, November 1st, 2nd. All right, let's go back to that just for a moment. So let's put maybe a big arrow. So December 14th, where's that? December 14th. All right, so that was that mass. Color yellow, put 4. So there's a Fed day there. Oof. And then the other one, November 1st, 2nd. And I think that was basically in here. Hey, up November 1st, November 2nd. Oh, interesting. Head fake, move higher, then puke out. These jerks. So, is there a history of the market getting bid up into these Fed events, then only to have its heart torn out from it, the other side of it? Slightly. So I'd be a bit concerned. But having said that, that's still it's not tomorrow. Where the hell is our little? It's one of these darn things. Nope. Nope. Darn. Nope. Where did I put it? Maybe it's down here. There it is. Date range. Yay. Okay, so this is daily chart. So that's still 9 days away. Could they just grind this thing higher for the next 9 days? Maybe. It's probably a little bit much, but you never know. Anyway, what I would say about this was an interesting consolidation. I think I had it not there. Where did I have that consolidation? It was fascinating. And, I was talking with Josh over the weekend. I think, we could probably do a lot of these little YouTube shorts. Can I learn from what just happened? And, should I take a screenshot of what just happened? And can I use this in the future? Because I think there was really, really good usable information here. I just have to find where the hell I put that on the darn chart. Yeah, Maybe it was this one. I don't think so. Just give me a second here. Not there. Was it over here? Boom. Boom. Here it is. All right. So here goes your short. You can think, and just like I said, Chris, if you could just make a time reference, then we could probably piece this together. So this is what's called a 3, 2, 1. This is what's called a diamond pattern. And a diamond pattern actually is nothing more. If you can think about this, if we took all of these candles and smushed them all together into one candle, it would make, and in this particular case, actually, you smush them all together, you can see it makes like a tighter pattern. Here you can actually see the diamond a little bit better. And actually, this one candle right here in the middle of the diamond is kind of the concept that I'm shooting for, but we could probably even smush this together a little bit more. And if we create a weekly chart, no, it doesn't show on the weeklies. Maybe it shows on the 2 days. There we go. Not the best example, but this is, to all intents and purposes, a doji. This is taking all of this price action that I just showed you there a second ago, all of this, and smushing it together. So think of this as nothing more than a trading range. And if we resolve through the top end of the range, then odds are the market is going to do nothing more than just literally replicate this range from this low up to this high above the consolidation, the doji, off the higher time frames with candlestick math. You can take that, apply it above, and this is our concept of the parking garage. Or in essence, we have a range, we've broken out of the range, and what we're most likely to do is just simply replicate that range to the upside. Also notice too, at the same time, if we took our fib and we apply our chaos theory, and this is Mr. Feigenbaum, his constant 4.669, it also is a fantastic guide that if this is a range and we've broken out of the range, then the natural tendency of the market, you can almost think of this as like the fib spiral, as price explodes and then sort of runs out of momentum and then sort of coils up for the next move. And that is Mr. Feigenbaum's bifurcation level. So next time you see this diamond pattern and you see that it looks like it's going to resolve to the upside, and we had a very powerful move through this level, which is in essence, in my eyes, bullish resolution. To come up with upside objectives, you simply draw your parking garage level, 1.618. That's the golden ratio. But also to apply your chaos theory levels. And if you start to see confluence, it gives you a pretty good idea of where the market's going. But also too, once you get up into here, hopefully you can see the price just oscillates around this number. Do you think that's an accident? Why is the market doing that? And the answer is because that is Mr. Feigenbaum's natural destination for this move higher. I don't know. What do you think? Was that about a minute? It's a pretty cool example. We can chop that up. All right. I don't know. Hope that helps. What do you think over there? Well, we got about 40 people over on YouTube. What do you think as a tutorial? Did that help you at all? Where is the that's these guys over here. What's up, guys? Not parallel channel like bands. Okay. Well, anyway, interesting level oneers, and actually this is probably a good segue. Level oneers, you are going to be learning about the parking garage in the weeks ahead. You recent level 1 grads heading off to level 2, hopefully you can, when watching this, you can understand exactly what I'm talking about there. And hopefully it can help you put sort of price performance into context. Why did the market stall out here? Why is the market oscillating off of this particular level? Is that an accident? The answer is, I don't think so. I suppose also too, and actually this is a really cool example. And one of the questions somebody asked me, in the AMA, we'll get to in a minute. They kind of asked me, well, Brian, is this a new bull market and all that kind of fun stuff? I don't know, maybe not. How am I going to do this? I guess we'll just do a new layout. At any given point in time, and this is what's a little bit shocking about what I see happening here right now, is let's turn stuff off. All right. At any given point in time, we should expect 38.2 retracements. That's Ray Burchett. One of the valuable lessons I learned from working with that commodities trader in New York. You can do it on the downside. There's a good example. This could also be another 1 minute, Google short. So there is a perfectly good example that at any given point in time, you should expect 38.2s to happen. So here we are all the way down. The market's basically moved. Keep in mind, Mr. Gann, he likes to suggest that markets move in like annual rhythms. And that's why I like to use the 50% level off of the 52-week range. So that is November 2021, November 2022. Oh, what a surprise. You can actually see that this is almost exactly from peak to trough, almost exactly 365 days. That's a little bit off. 375 days, maybe let's go around, but 377, right? But the point here is that this is so perfectly W.D. Gann. He loves this stuff. I mean, this is a huge component of our level 2 program. Really, I don't think you can have a robust education program when it comes to technical analysis without fully understanding who Mr. Gann was and how we use his information to help us with levels. And in fact, I even saw Shartoshi was posting Gann 8-to-1 angles off of these lows actually defined why the market stopped here. But anyway, Mr. Gann would just simply say that at this point, 52-week range, what we probably should be thinking about is at any given point in time, you should expect 50% bounces. So if we couple this, hey, Ray Burchett says at any given point in time, you should see 38.2s. You don't always see 50% retracements in under a year period, but on balance, you should. And Mr. Gann would say on an annual basis, you absolutely should see 50% bounces. And if we did that off of this, then this actually, interesting enough, one of my previous students who's gone off to be quite famous in crypto land, he came up with this idea of if we take Mr. Burchett's 38.2 and Mr. Gann 50%, and if we are a bear and we want to join this bearish party, then this is actually the window that we should be hunting for to actually join that bearish party. So what do you think, guys? Is that a little bit higher than where we are right now? There's still quite a bit of wiggle room in this marketplace. And I don't think people fully appreciate that. It's not necessarily that this is a new bull market and we're going to 100 million, bazillion, gazillion, gazillions, whatever. But is it realistic at any given point in time to expect 38.2s to 50%? Yeah, you should expect this. And I suppose you could make the argument that, that is a pretty substantial looking little W there on the other side of this trend line. Does that mean that this asset is trading at value? No, doesn't mean it at all. Does it mean that the market is put in a bottom and it's in rally mode and the momentum is pushing up? Yeah, it sure does. I think I would articulate this as a technical move, but I don't know whether I would articulate this as a fundamental move. So as a result, I don't think I would call this a rational investment decision. I would call this a technical trade setup that looks like it's kicking butt. But I don't know whether I would buy into the idea that Bitcoin is fundamentally cheap right now. I don't buy that argument. But so what? It doesn't matter. It's just one man's opinion. There was somebody who asked that specific question, so I'll just circle back around and give you this response. If anything, what I would expect is this rally here, this kind of counter trend rally should probably, again, this is just good old WD Gann 101, be about 50% of whatever the distance was from here. So 50% of 377, it's like 150, 180, 183, 184, somewhere in there. So if we, there's 184, that would be 360, 368. That's a little bit short. 190, that would be 380. So yeah, maybe somewhere in there, 100, I'll go 88, something like that. And I suppose that's old fashioned. And now you just go, all right, Brian, quit being fancy. 377 times 0.5. Boom, 188.5. Well, there you go. Merry Christmas. So if we do something along those lines, then really we should be thinking just totally natural, not a new bull market. Whoops. Just the, like if you throw a rubber ball out of a window, let's say it's a 4-story window, right? And it hits the ground and it's gonna bounce. Well, that's exactly what you see happening here. And really, I might even argue that you could probably put a line here and there is your rally window. It's fascinating how close to almost exactly 1 year that bear is. It's remarkable how consistent this stuff is. So where does that put us? That puts us May of this year. Now, if anything, what kind of bugs me about crypto now is I think it has been completely quote unquote securitized. I think you would make the argument, the fact that this market bottomed here at somewhere around between 16 and 18, 19,000, something like that. Since we know it's not quote unquote value, what do you think is going on here? All right, 52 weeks from now, 50% is about 32K-ish, more feasible than 42K-ish. Okay. All right, so back to what I said. I'm just reading what these guys in the chat room are posting. What do you think's kind of going on here? We know, and there's even public publications by some publicly traded crypto companies. One company in particular that had like 14,000 miners, and it said its cost of production was about 7,000 US. So we're not trading at fundamentally cheap levels. What are we doing? What I think we're doing, I hate to say it, is I think we are building a securitization trade where you buy when it's somethings. You probably heard me talk about this in the commodities market. Not really a big surprise. Very what they call seasonal trade. So you want to buy when it snows. This is where it starts snowing. And you remember how they had the whole public and everybody all freaking out there into November. I remember that specifically. In fact, actually, our algo spit up just some incredible buy setups Like on the Dow, we literally, the algos were all basically saying, get long. And I remember the algo wanted me long at around 22nd of December on crypto, which was actually a really interesting leading indicator. That was over here. I mean, Jesus, perfect signal. Anyway. So buy when it snows, ho, ho, ho. And really through Halloween, there was also big like blood eclipses and a whole bunch of celestial events that had all the celestial people freaking out. And of course, the public was just insanely bearish. So actually very typical what I see going on here. And this will be, let's see if anybody can fill in the blank. Sell when it's something. I frankly speaking, getting into the prediction business, I don't think is in anybody's best interest. I would just simply say that this does look to me to be a very typical seasonal trade. I really don't see anything shocking. And what even makes it even more of a seasonal trade, absolutely perfect, is the fact that, like, literally here's January 1st of the brand new year. And I started off this broadcast with, holy crap, do you see what's happening in the venture cap part of this space? And really, I'd say the whole space is venture cap, but like the Schalt coins, they're going crazy right now, right into the new year. Why? Well, again, this is all about the securitization of this industry. And the fact that new capital comes into the space literally January 1st. And if you look, like this was one that one site member, I think I told you earlier, he got me to go and buy, which I'm very thankful for. But look at this, like literally that is January 1st right there. And it's just literally straight up since. I mean, come on, what's going on here? I mean, clearly there's a ton of new money pouring into this space. And it's interesting to see this part of the market is now totally kicking it here. And, this is what has me scratching my head is there are a number of names that look like this. I'm surprised the Bitcoin dominance is doing as well as it is, given that. It's a bit surprising. But then I also, too, I'm a bit surprised the way that the algo is kind of flashing over bot signals there, but the market's like, screw you, Brian, I'm going higher. So, yeah, go figure. One thing I will say about this image, which I think Julian had it totally nailed. And he was just saying earlier that it felt to him like this was just going to be nothing more than we're going to go after all of these liquidity pools. So a week or two ago, Julian was on the Daily Brief and he pointed out that each of these are probably going to be like magnets for market. And so, I mean, look at this. You can't write this stuff any better. It's shocking. So we go through this level, and where does the market initially goes? Boom, straight to this level. It cleans out those stops, and then notice it had to pause. And like I was kind of thinking, okay, it's probably going to have to do this kind of action right now. And even the algo thought it was going to have to do that, but then it just paused and said, okay, I'm not done. Let's go after the next one. And pow, right into this level. And notice, look what's happened. We're basically stalled out. We got a shooting star going here. Why? Because they went after the stops. They went after the guys that are sleeping on the couch, all their orders. They bought. They want to get the hell out. So they're going to be, basically providing the liquidity for these guys to ring the register. They buy it here and then sell up here into this liquidity pool. And considering that the Fed day, and this is now a 2-day chart, if we put this back to a 1-day, the Fed day, Armageddon, is still basically a week and a half, 2 weeks. Is it beyond them to maybe run price up a bit higher and take out this liquidity pool? I think so. I don't see any reason why it can't happen. And if anything, A, B, C, D, harmonics, this thing's got a head of steam behind it. I don't see it not happening. Anyway, we'll see what happens. As I had sort of alluded to earlier there, I'm building shopping lists and I'm trying to get long. I mean, there's some interesting sort of individual names, Stewart, for example. He had a buddy of his who's basically in the business of competing with Ticketmaster. That whole Taylor Swift kind of idea. That was a name that he pitched us. I was kind of curious. I was like, why are we interested in this thing again? And so this is done on DeFi. Won't do any more business. If anything, this is a good analogy to remind me. I have the Bitterx quote on here, but this is all done on DeFi. Stuart's got a whack of Ethereum's got a whack of Bitcoins of course, we've got the sushi on the books. Sushi's actually looking half decent here now. And if anything, this sushi trade, this is exactly a trader's life. Absolutely perfect analogy of a trader's life. Where it's sort of like, well, you have an idea. Oh no, I guess it was over here. You have an idea. Sometimes you're right, sometimes you're wrong. But you have to define what it is that's going to get you to act ahead of time, and then you just got to live with the results. Here it is. So sushi now, originally I picked this up here. Can't remember whether I bought some more down here or not. I should have. Okay, nice double bottom. But I think this was a demonstration of just like what I call a Joe six-pack risk taker, where we just bought this level. We're going to risk to a break of these lows, risk this capital, and notice how the market came down. I was looking like a total doofus, but now, all of a sudden, mysteriously, now I'm not looking too stupid anymore. So great analogy of a trader's life. And really your job as a risk taker and all you level oneers, this is what you're going to have to learn is, am I the little old lady who just doesn't really want to think too much about doing all this stuff? Just going to go and buy some good names. And in this case, it would have worked out perfectly fine. I mean, there really wasn't anything that big of a deal. Are you Joe Sixpack? You're going to take a little bit bigger sort of portfolio punch, but at the same time too, you're going to risk 10% of your stake. But at the same time too, if you lose 50%, it goes against you. You got to get the hell out of there. Or are you Mr. Margin Trader, where you're going to risk a pretty big sizable chunk of your capital. In fact, when I was futures trading, you used to have to put down like just initial margin deposit, like thousands of dollars just to control a contract. They called it a performance bond. But if that trade goes against you, you better get the hell out, or you can lose everything really quick. And I can't tell you what kind of risk taker you are. That's the whole point of this education program. And ironically enough, it's actually the one thing that they never talk about in CNBC. You very rarely ever hear them talk about it, but I do hear Kramer. He does a pretty good job. He tells you, like, maybe pick like 4 names that you like, and then keep a whack of money in cash on this sideline. So, you are invested. That would be like typical Joe Sixpack kind of trading. But like social media influencers and stuff like that on YouTube and all the various different, and none of them ever talk about the risk management side of this, which is kind of sad. It's a little disappointing. I do hear some of the kids talk a little bit about risk management with regard to Mr. Margin Trader, but they don't really sort of give you the full picture of what are the various different types of risk takers in the marketplace. And really, the ultimate goal of our education program is not to tell you what to be. It's to show you the full gamut of all the different possibilities. And then you decide personally what type of risk taker meets your sort of lifestyle and your personality type. So anyway, point of the matter here, this is a really, really good working textbook definition of how the various different risk takers would approach this. And see, Mr. Margin Trader, he's just killing it right now. He's already shopping for his damn Lambo, the bastard. Joe Sixpack, he's just getting back to respectability. Yeah, I'm long. Yeah, let's see how it goes. I don't know, that CZ guy's going to screw me over. And little old lady's like, I don't know. I bought a little bit for my portfolio. I'm off playing canasta right now. I don't really care. Don't bug me. So, and actually, speaking of which, it's kind of maybe a good lead in. What the hell? Segues are segues. I thought what I'd like to do here over the next 2 or 3 months, because me personally, for whatever it's worth, I mean, I might be wrong. Who knows? Doesn't really matter in the end. But what I think's gonna happen here is this is gonna make some sort of big honk and like head and shoulders kind of pattern. We might come down. In fact, I wouldn't be surprised if I don't think into the spring you actually get that big of a thumping. I think this probably works pretty well into this sort of sell in May and walk away narrative. But I can already start to see it. There's going to be a huge showdown down in the States over this whole debt ceiling crap. You can see it coming 100 miles an hour. So my hunch is we're probably going to do something along these lines. And then in the fall, that's actually when the poop hits the fan. And it'll be interesting if we just sort of, go back, months from now kind of idea and see how this plays out. Obviously this kind of prediction is going to take a hell of a long time to play out. But my hunch is something along those lines. That's what I'm thinking is likely to happen. Yellen even came out and said, because keep in mind this whole debt ceiling issue, and this is what really bugs you about this is instantly, the socialists have gone absolutely insane overboard with all the spending that they've done over the past couple years. And in previous administrations and previous US government iterations, it's been more like the tax cuts for the rich and the big conglomerates and stuff versus over the top spending, which have sort of screwed up the balance of the budgets and stuff. But the long and short of it is everybody is culpable. And the U.S. debt, and really keep in mind that we should preface all of this conversation with it. This is exactly what I think the banksters want. This is their plan from day one. So it's not really like anything is happening that's not supposed to happen, but that's another conversation for another day. I would just simply make the argument that the people that would like to try and maintain the purchasing power of the currency as much as possible, they've got the upper hand right now in the US government. The current government, the executive side, of course, is going to say, well, everybody overspends. So why are you raining on the party now? Just keep the party going. But I get the impression that there's a good chunk of these newly elected representatives down in the States that would like to at least see this come to some sort of head. So with that said, they are going to put up a heck of a resistance about raising the U.S. debt limit going forward. Interestingly enough, I think that the banksters see that the U.S. Representatives were newly elected. Their constituents are paying close attention, of course, just as they've taken over this new U.S. Congress. And I think the banksters themselves went, you know what, this isn't a fight we can win right now. Let's just give them 6-8 months. And so mysteriously, Miss Yellen just, it turns out we can find a couple dollars here. We can do something there. And all of a sudden the issue disappears and the stock market starts rallying back up. Bitcoin's rallying, blah, 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 blah. But I do believe that this issue is going to come to a head sometime once the whole seasonal trade is done. And Yellen has even said herself that, mid-June, mid-July, that's when this thing's going to come to it. And you better get serious then, blah, 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 blah. The interesting thing is I think it would be best for all of us. It's going to suck horse cocks for anybody who's leveraged and, people that, borrowed too much money. They could get absolutely destroyed here. But I actually think it would be good in everybody's best interest if they said, nope, sorry, you know what? We're just not raising the debt ceiling anymore. You want any new government spending? It's got to come from revenues raised from taxes. And the whole economy, of course, the stock market would just absolutely collapse. And then the question there becomes, does the bankster class spin that as, well, It was these radical new politicians that wanted to upset the apple cart. They're the cause for this recession, when we know all along that a big fat recession is going to come at the hands of the Fed raising interest rates like a drunken whore, which is ironic because they were spending money like a drunken whore before printing money. I mean, who's really at fault here for these wild economic gyrations? And this is the one thing that drives me crazy. The leader of the opposition in my country had the Bank of Canada governor cornered, where basically the Bank of Canada governor said that the Bank of Canada, which is nothing more than just an oligopoly of the largest Canadian banks, and of course they're all owned by the Rothschilds, so go down that rabbit hole, tinfoil hats, all that. But in essence, he had the Bank of Canada governor cornered in that they publicly came out and said, borrow as much money as you possibly can. Interest rates are never going up again, which was anything but completely opposite to what happened. And he even said, were you wrong? Why do these people even have these jobs? Do you think that if you were a big money manager at one of these banks and you were that wrong, you would keep your job? Remember who these bank shareholder people are, right? These bank people, Rothschilds, all that, they're not this guy. I can tell you that much. They are not him, right? They are him. Now, if you completely got your job totally wrong, do you think he would let you keep your job? So this is what I just don't understand is no offense, but every single one of these bank governors, their public statement has been exactly the opposite of what actually has happened. So why do any of them still have their jobs? I don't get this. It doesn't make any sense. And this is like, why? What the hell does a Christine Lagarde actually do other than just some mouthpiece for somebody else? It's not like she has a history of being a banker. And that's the irony of all this. So these people that are running the show, they are publicly telling us exactly opposite of what's going to happen. Now, either they're really, 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 really bad at their jobs, or this is all done on purpose. And actually, they're very, very, very good at their jobs. That's the worst part about all of this, folks. It's so sad. So I do believe that the banksters need the United States of America machine, especially to keep their business model going. They need the United States of America's taxpayers to endorse the idea that there will just be an endless increase of debt. And what ends up happening, sadly, is the standard of living just gets diluted more and more and more. And I've said this repeatedly, folks, ironically enough, for the Western societies, what the hell's that character's name? Screw. I don't even know how you spell it. All right. What's so sad is you can already start to see it happening. There he is, Scrooge with 2 O's. You can already start to see it happening. Like a loaf of bread starts at $1, and so everybody eats lots of bread, and everybody's happy-go-lucky in this gentleman's world. And it's actually interesting how you don't even really see, like, you just Google search, and I guess this isn't even Google. This is this pre-search, but you search for Google or Scrooge, and really, this is where we're going. Look how soft and fluffy all these images are. I mean, when I was growing up, Scrooge was a really nasty, ugly character. Isn't that interesting how over time they actually, you know what? Living a Scrooge life where you have a nasty overlord who makes you live in the cold and the dank, and you're not that, or, you know, you just don't have any food and stuff. You know, are they going to make a loaf of bread $500 a loaf? So then we're right back into this world. Is that how this is going to play out? It seems logical to me. And I've often said that really, you know, the worst thing that could possibly happen for Western civilization is for the Soviet Union to actually collapse and the West to actually win the Cold War. How ironic, eh? So you can already start to see it, whether it be food prices, whether it be energy prices, whether it be rents. I mean, I find it fascinating. Like, if you just thought about this in simplest terms, if you had like a government that's for the people, by the people, and you went into a massive health crisis, wouldn't it be simple for the government just to simply say, look, at while we're going through this health crisis, we're going to put a freeze on prices. Nobody's allowed to gouge the public. Nobody's allowed to screw your neighbor over. Everything's just got to stay level. Once the health crisis is passed, then you can go about your regular business. And if you want to crank prices up and screw your neighbor over, go for it. I mean, that's what I would think a government for the people, by the people would do. But what happened in this health crisis? The exact opposite happened. I mean, basically, it was like carte blanche. All right, open up the floodgates. Time to screw as many people over as possible. It's shocking what's happened to society. It's pretty sad, you know. I'll have to say that's sort of a side rant. But my hunch here is that we are slowly but surely heading towards Scrooge society once again. And the irony of it all is that substitute drama teachers actually are helping this cause out. And ironically enough, I don't even think they realize that they are, but they are. Oh well. All right. You know, if anything, this is a great analogy. And this, you know, this is another warning that I had for this space. Was I remember when I first got involved in this space, you know, Bitcoin was like a few $100 and everybody's going, it's going to 10,000, it's going to 100,000. I was like, okay, fine. You know, you can have your Bitcoin go to like $10,000 a coin, but I hope you enjoy the fact that that means that your loaf of bread is going to be $20. We haven't got to that level yet, thank goodness. But Bitcoin moving higher in price has, in my opinion, less to do with Bitcoin itself becoming a better network and more to do with the dilution of the purchasing power of the fiat currency system and basically the collapsing of the Western civilization. There's a statement. And all Bitcoin is doing is just purely offsetting the effects of the hyperinflation that's being forced upon us by substitute drama teachers who think that they understand economics when all they're doing is they're just taking out of one mouth and putting it into another mouth. And unfortunately, in the process, there's a lot of people that get greased along the way. So, oh well, what can you do? All right. So you got a little bit of price analysis. I mean, ironically enough, Bitcoin rallying into the level that it did, I think is actually, believe it or not, like trading wise, I think it's actually realistic what happened here. Algos are still sitting on the sideline, but at the same time too, I have a big concern for what happens in about, I don't know, I guess about 2 weeks or so, right in here in the short term. So my hunch is that there's going to be some sort of finagling all through this next week or so as the market sort of gets ready for the next Fed thumping. We might be higher, like I said before, while we're sort of in this vacuum waiting for the Fed, which is about a week and a half away. Could we have them run another one of these liquidity pools? Sure, wouldn't surprise me at all. And just understand, folks, I think it's super important they understand at any given point in time, you should expect 38.2 retracements, any given point in time at all. It happens. In fact, if we look at the this cycle bottom, notice we not only did 38.2 and basically a straight line up. Oh, come on, you. There we go, somewhere in there. Oh, still not right. Come on, there we go. There's 50%, and then notice big fat M. But actually, this would be like Paul's ideal trade. But anyway, old futures trader that I used to work with, he used to always hit 61.8s, right? This good old mountain man. So they got rid of the M. I have no idea why. So anyway, we have to take that W with the lines through it, and we have to turn it upside down. So, we might just do something like this. And then on the other side, have to come all the way right back down. And if this is the case, I'm not going to sugarcoat it. This is difficult as hell. There is the buy level, and you see the original W double bottom. They always say history rhymes, it doesn't repeat. It was interesting how Josh sort of projected that he thought this cycle was going to go along these lines. What I'm just going to simply say is, if we do get that debt ceiling issue, and it causes the broader capitalist market to completely melt down, this low here, of course, was on the whole sort of COVID shutdown event there back in 2020. Had absolutely nothing to do with Bitcoin at all. So if we get one of these government COVID shutdown, or not COVID, but government debt ceiling debate, and the whole damn market comes off. But of course, we know that the 1%, the banksters, Rothschilds, whatever you want to call it, they want to get that stock market sell off so that the Republicans in the US Congress, all the public goes, oh my God, the stock market's crashing. Vote for more debt. Give them the fucking money. Do it now. That kind of shit. That's the way that these banksters work. They're going to work the emotional side of the public. It's the way that they do business. So don't be surprised if this kind of scenario plays out. I guess what I'm simply saying is, I would imagine that this go round, I don't know. I wouldn't get into the business of predicting what's going to happen here. But what I'm just going to simply say is something along like that. I don't know whether we can get all the way up to Mountain Man. Maybe we can. If we can get all the way up to Mountain Man and we pull back to 78.6, then that actually sets up a massive harmonic. And this was one of the reasons why I think Bitcoin did as well as it did, was you can see, was that it there? That's a bearish harmonic though. So actually that's not exactly what I was thinking. But actually, no, I think you can actually go like up to like, 2 point, I think you can go as high as like 2.9 or something on this. Anyway, up into that area there. And then also too, if we can carve out a W like this, then that of course starts setting up all those big honking chaos levels. So regardless of this harmonic, put that idea away for now. What I'm just going to simply say is, if we can get this kind of price pattern, then, oh man, does it ever set up for a big bull market once we get into that 6 months prior to the halving event window, because that's when I think the real magic really starts happening here. And remember, in this particular case, right, we had the halving event, I think it was May 11th, if I'm not mistaken. It was around my birthday. And this window here is what I think we're waiting for, right? So that's 412 bars. What is this? This is a daily chart. I thought it's Chris's birthday, if I'm not mistaken. Anyway, I think it was something along these lines. That's 400. That's a year though from that actual bottom. think we've said that somewhere around 6 months prior to the halving event. I can't remember exactly how this goes. I don't think this is right. Maybe it was actually, you know what? It might even have been the halving event, might have actually been right here, you know. I remember it was in May, might have been May 20th. That could have been it. So 6 months prior to that would have basically been what, 365, so 100 and 170, 180 days, somewhere in there. Anywhere in this area, I think perfectly fine to start acquiring. I think acquiring here, if you can get that bottom, awesome, way to go. But if it starts running away, starts running away, I would just simply draw fibs and of course wait for the reload zone retest. Is this going to be an easy peasy bottom? Make this super simple? I don't think so. In fact, what I think happens this go round, which sucks horse, you know what's, is they've goaded everybody into thinking about, oh, well, the last cycle, this is the way the bottom happens, and that low is going to hold. So this time they're going to break that low just by a bit, just to see if they can get people to freak out and sell at the lows. So that's kind of, you know, if we take this forward, that was this kind of thinking. I like the idea of us rallying up. There's that double bottom level. Ironically enough, if we do the 38.2 to 50% sort of top, wherever the hell that is, then we come down following that into reload zones and put in W's and stuff down in through here. Notice that that's basically going to be right at those lows there. I personally think, and it's just opinion, that they're actually going to take that low out just by a hair. But we'll see. We'll come to it when we come to it. Okay, 11:38. So I blabbed away there for about an hour and a bit. Probably, I know there are a few questions that I should try and answer. And of course, a lot of this was one of the questions that I saw. So anyway, we'll just jump into this. Did you say, Chris, there was a question from like Friday or something that what? This one here we haven't answered yet? Okay. All right. So this is Geo. G-I? G-O? Yeah. Gio? It's terrible. Sorry. Okay. Hello, Brian. After all these new rational, irrational FUD after the FTX fall, Bitcoin seems to be very resilient. Well, the sad part about it is this whole big BTX fall had absolutely nothing to do with Bitcoin. And I've seen this repeatedly, right? Last cycle, it was Steven Seagal and Floyd Mayweather. And Eddie, you got your microphone? How does that guy go? You know what I'm thinking? He's actually pretty good doing the interpretation. No, he goes, man, I'm not gonna do it. Oh well. You know, BitConnect, right? That had nothing to do with Bitcoin, right? So I would argue that FTX had absolutely nothing to do with Bitcoin. Ironically enough, the very first scandal that I remember getting into the space with, Silk Road, had nothing to do with Bitcoin. But really, the scandal that derailed Bitcoin through that was Mt. Gox and Mr. Karpelis. Nothing to do with Bitcoin. So, I mean, that's the irony of all this. So, Bitcoin seems to be very resilient. Yeah, I don't think anything's changed with Bitcoin. And like I said, I've said this repeatedly. I believe that Bitcoin is actually a product of the CIA or certain sort of elements inside the CIA. And it was designed to give some sort of avenue to protect people in the know who saw this quote unquote great reset. Thanks, Klaus, you dickhead. Saw it coming. They knew what was coming. And they saw that holding your assets in US dollar denominated assets was probably not in your best interest, which is a bit of a shame. Because it just seems to be such a repeated story through human history, the way that one group or another group takes advantage of others in society. Because, okay, so like no effect of new bad news in the previous bear market, like no effect of bad news in the previous bear market. Is it a sign of bottom, or is there something else to be understood? I think more importantly, Bitcoin operates on this 4-year money cycle. And actually, I was going to mention this earlier, but I kind of got derailed because for some reason I seem to get triggered when I start talking about banksters. But I think what I'd like to do here for this particular cycle, I haven't done it before, but I know a lot of people like Ray Dalio and his sort of video on how capitalism works. I think what I want to do is I want to put together a PDF that specifically outlines things like the macroeconomic picture, why Bitcoin is acting the way that it is, what its job is, and then how Bitcoin actually moves with regard to these money cycles. And the weird thing is that I guess I kind of sort of take it for granted that everybody knows this and that it's just common knowledge. But I'm actually surprised how, this is like my third cycle through this and nobody seems to catch on that Bitcoin moves almost perfectly with things like the monetary policy cycle. When the Fed's raising interest rates, Bitcoin usually does shitty. When the Fed's cutting interest rates and panicking and pleading for people to spend money, Bitcoin does very, very well. What a surprise. So, and my request to anybody at TRI who would like to participate on this, I want to do this PDF and then I want to do sort of a video walkthrough and I want to give it away for free. So quite literally, this document, it should be about a 3 or 4 page PDF, and there should be an accompanying video that I'll just sort of slowly speak the words of the document. It's basically outlining the next 35 months of our lives. Now, do you want to take the next 35 months to effectively set yourself up so that you can go buy islands or go buy French ladies' chateaus so you can build schools in person, and what it's going to mean, and that was a direct relation to the fact that I want to go buy a piece of property in sort of rural Portugal and teach a school out of there in person doing exactly this stuff. But the point here is that this, one should look at this as like a 2 or 3 year journey. It's not today to tomorrow. It's not today to next week. It's not even today to this summer. There's going to be lots of opportunities to accumulate, sell portions at substantial increases, then buy those positions back over the next 2 to 3 years. So this is really sort of a roadmap for what this coming bull cycle is going to look like and how to set yourself up. And what's kind of cool, I really liked it on the site. Of course, we constantly talk about the little old lady risk management strategy. And it's a way of participating in asset speculation that's relatively low anxiety. That's the whole point of this. And what I do find fascinating is how people say, well, little old lady doesn't work anymore. That's not the point of it. What you do have to understand is the context of the broader market and whether it's even realistic to think about the market continuing to go apeshit to the upside after it already has gone apeshit to the upside. Usually that's not realistic. And, I even asked somebody yesterday if we could make a cartoon image of Sedona Euphoria. What would a cartoon image of that reference, and I, jokingly made reference to Sedona. I was going to change my name to Sedona Euphoria that last cycle because everybody had just gone insane. I mean, it was just utter stupidity out in the marketplace. That's my reference. And that is what's going to happen into November, December 2025. And so the plan will be to liquidate into that event. And then, like I said, go shopping for our islands or our, Portugal retreats to build our campuses. And actually somebody on the site, it was really cool. And I love this. So we can actually like name brand this and even maybe like a trademark it. So other people don't sort of borrow the concept, but we're going to call it that. And somebody in the site, I can't remember who it was, but shout out to you, called it the Canasta Club. I mean, what a perfect name. I love it. The Little Old Ladies Canasta Club. And I think that we could actually build a nice little newsletter following off of this. So the point here is that the goal over the next couple months is to clearly articulate all the reasons. So, one gentleman said, you know what, I'll put the PDF together. We'll do it all the pretty pictures and stuff, but you have to lay out the arguments, Brian. How is this going to look? And what I need from all of you guys, especially TRIers, I talk about this at length. And so all we want to do is we just want to find references and reference pieces to speak to each of these concepts that I have listed here. And I'll sort of go through this on the site, daily brief, sort of, the after party. Oh, I need somebody, who's really super jazzed about Mr. Cohen and his stock to flow analysis, all these. I might have even gotten that wrong. And all of their sort of on-chain analysis, sort of, what does value look like? I've heard recently that some of these on-chain guys are starting to say, hey, you know what, there's evidence that we're starting to go. It's not something that we don't give this, Mike. This is a Miha, this is a document that we're working on building. And once this thing is filled out and I have all the reference pieces and stuff for it, then I will publish it. It's a work in progress. I just started this just this weekend. So, come on the site, come on the Daily Briefs. We'll talk lots about it. And if you happen to see, for example, Efficient Frontier, I would make the argument that it's not really in your best interest to be a Bitcoin maxi because you're just leaving a lot of money on the table. So, do you want to participate in the names that do like 1,000x? I mean, like Sjordan is Luna. When he was first interested in Luna, it was like 60 cents and the damn thing went to over 100. It turns out it collapsed, but there's no reason why you couldn't have made killer dough on all that. Exactly. That's what I'm asking, Banco, is what I want this, because I want to give this document away for free. So I want this to be like a community project that we all contribute, and it literally becomes sort of like the industry standard as we work our way through this 2 or 3 year cycle. Google searches. What I thought was so freaking cool, and this is just the power of PMA, is now if somebody goes Benner cycle on Google search, what's the very first thing that pulls up on the Benner cycle now? I mean, look at that. That's the very first thing that pops up. Good old TRI. Way to go, Josh. I mean, you can't get better marketing shit than that shit, right? So the point being that Josh did this for free. And the amount of traffic that this has generated is stunning because it's the very first thing that pops up. So what I want to do, and I'm a little disappointed because I see a whole bunch of sort of fly by night people that come along and that do research on this stuff. I want this document to be like literally Wall Street would literally eat off of this document. It's that sacred. It's so perfect. And I think we can do it. And really, I think there's a lot of arguments that we can articulate that this document should become basically, mainstream. And then sort of the final piece to all this, of course, is that the Little Old Lady Canasta Club has a portfolio. And, this is, Eddie suggested that, maybe this particular cycle, we take the money that we are thinking about putting into the Portugal property, but we leverage up and we go and do our research and we find a bunch of names that we like. And frankly speaking, I don't know whether these are the names or not. I'm just building this out. And of course, we have a club at TRI that we've basically said, and I know Eddie is an excellent sort of organizer of all this. He already has like spreadsheets and stuff like that. So I'm just simply saying is, can we take that sort of communal list, kind of like what, I don't know whether I showed you before, but Mr. Matador had actually showed us, he shared with the community, because I just asked, and this is the great part about our community, and it's like one of the main sort of driving benefits of our community is I just went in the lounge and asked, hey, has anybody got sort of like a list of assets that they kind of like right now? And we can start doing some shopping. And man, we had lots of people like this one. I told you, the Matador. And look at his list. I mean, some of these names, look at that pretty chart. The thing's already taken off. Hey, stop. Come back. And I think I showed you like, look at that guy. Hey, wait, stop. Quit going up. I want to be logged down here. So some of these I've missed. I was able to sneak in on this EOS, so I got in off of that. So we'll see what happens there. Eddie, he loves his KMD. And I was like, the other day we were down here, I was like, okay, fine, I'll buy that. There is the W. So I'm long from down there. I don't know where the hell I'm long. Bought the original double bottom level. So I'm in. Merry Christmas. I'll keep adding. But the point is that this is our list. And of course, Stuart and his name. So he's super jazzed on this RNDR. Of course, Brian and the sushi story. He's also got a couple others. Point here is that we're already building out the little old lady list. It's already starting to happen. So it's already underway. And what I would like to do is just simply say something like, this is our plan for the next 2 to 3 years. And our plan is that we want to take at least $2 million out of the marketplace, because you're going to have to give a big chunk of it to the tax man. So we better have enough after the tax man gets his chunk to go and buy a nice piece of property. As well, too, there are many different approaches, right? There's just the simple buy and hold approach. And then there is, like I said, you can approach this next 2 to 3 years playing the market seasonally, buy when it snows, sell when it goes, the whole tax window advantage. So there are many different ways to play this, and I want to outline that in the document as well. And then really what this ultimately should be is, if you're interested in sort of coming along these lines and finding out what it is that we're actually doing, then we have a club and a newsletter and stuff that you can sign up for. Again, all totally free. So that's the whole point of this exercise is I want to clearly articulate the argument. So, I do have, I've shared this with Eddie. I think Eddie's on this document as well. I shared it with Josh. I would just simply say, if you are a site OG, or you feel like, take a screenshot of that. If you can help me through things like, I'll even put it on the, I don't think I can do it there though. Where can I do this? Where's the site chat? I guess it's right here. If you can help me answer these questions, and what I need is, I specifically need, and I've just posted in the lounge there, so, site members kind of idea. If you can furnish me with actual articles that we can embed in the document so that you have outside reference. For example, just recently, what do market bottoms look like? And I've told you guys repeatedly that if you ever hear talk about a 51% attack potential on Bitcoin, what should you expect to happen out of Bitcoin in the not too distant future? Anyone? Have you ever heard me make reference to this? And if you haven't, then gee whiz, get your pen and paper out in your journal and write this stuff down. Anybody over on YouTube? What is supposed to happen if we ever start hearing talk about potential 51% attacks? NGU, what does that mean? Is that a name we should add? Number goes up. That's good. And what has Bitcoin price been doing recently? Anybody? TBG, what do you remember this? I know you've been here, and I know that you and I even talked about this. And what a surprise. What has Bitcoin price been doing? So, like I said, and 1 + 1 = 3. You guys, I'm sure some of you even have this stuff bookmarked. So if you see, things like calls for regulation, well, I mean, you saw the FTX thing, obviously, scandals, right? Is that not a perfect hallmark? This is all about quantitative analysis. So the point here, I mean, like, for example, in this article, we should definitely have a good conversation about Remy videos, because I'll tell you, you want a perfect contrarian indicator on crypto? Just what if Remy is making videos about the sky falling and people getting destroyed, then the odds are we're damn close to a bottom. If Remy is making videos about people getting rich off of dog money, then you know that we're close to a top. It's just that simple. All right, excellent, Nicholas. There's another thing, right? So we could even have here, what do market bottoms look like? So we can even say, all right, we're already there. And this is exactly what I was hoping for, is that we're going to work together to really make this document bulletproof. But just as Nick said here, we'll say Bitcoin BTC obituary or obituaries as a perfect contrarian indicator. So what I need from you, Nick, is can you find me, now you said you posted a chart, so I need that chart. And if anything, Nick, if you want to PM me your email address, I'll add you into this document. If somebody on the site, part of the community, is like, Brian, I've got something to add to this document, please let me know. The point here is that you guys have heard me barking like a madman on social media here about the bottom, all that, right? And how ironic that when the market was topping, it was impossible for me, and I was getting angry and bitter and pissed off. And then, of course, the whole fucking market collapses, right? And now here we are at the bottom. We have to put our mark that, hey, TRI is telling you the bottom is here and it's time to start rocking and rolling. And I don't want to make any money out of this. What I want is what Josh did here with this Benner cycle, is that if somebody's going to say, find me a Bitcoin article or something like that, this thing's right up at the top of the list, because this is the shit. We've been playing this game long enough. We know exactly how this damn game works. It's not rocket science. And it's ironic, of course, right now that you go out into the public and you tell them to buy crypto, and it's like kryptonite. So I wanted to make mention to that. So sorry I got off topic there, but okay. So now back to the original conversation. Cool. And I'm already starting to hear DMs. Remember, I do have to leave for Liam here, so I won't get at this today. I'll get at it when I come back from with him tonight. Okay. Okay, like no effect of bad news. Okay, it's very difficult to ignore these kinds of floods. Yeah, I mean, the irony of it all is, try and remember that the CME boys got angry at me for coming to you guys to try and teach you how to play this game of speculating correctly. They said, Brian, you're wasting your time. So this is normal. This is exactly what you're supposed to do as a human. Now, what do you think the easiest way is to actually deal with this? There's actually one really, really easy way. Don't listen, turn it off. I mean, ironically enough, and half of the joke we talk about when we teach people how to trade is, once you actually learn how to play this game correctly, it's almost impossible to sit and talk to anybody about, actually making rational investment decisions. It's almost impossible. And I often see, especially like Sedona euphoria kind of environments, it's almost impossible to actually get the message out. Don't buy here. You're walking into a trap. And then conversely, when the market actually is a bottom and you should be accumulating, well, now you should be buying, but I don't have any money because I lost it all. It's frustrating. So this is and keep in mind too, the only way institutions can buy in size is they have to get the public to sell in size. And the public doesn't have a lot of size. So that means that they have to operate right across a massive spectrum. I thought it was fascinating the other day. The news headline was Justice Department to announce a massive action in the cryptocurrency market. And if you read the headline, you're like, oh my God, it's the end of the world. And then the news came out that, well, they decided to step in and close down a Chinese-based Russian money laundering crypto scheme. I mean, of course, duh. And I mean, that's the big news. So that's exactly what they're doing to you, Gio. And it sucks. You're brand new at this game of investing. I'm not going to sugarcoat it. I'm not going to make it easy. It's actually going to be damn difficult to deprogram you from all of the shit that you've had rammed down your throat your entire life to get you to act emotionally when it comes to financial management decisions. It's not easy to reprogram you. In fact, I often say that it's much easier to teach a student who comes to me and says, Brian, I've never done this before. I haven't got a clue what you're doing. I haven't got a clue about trading or risk management or cryptos or whatever. I've never done any of this before, but I was told to come to you to learn. Those kind of people, it's like, oh, this is going to be easy. It's the people that, watch, and I love this space dearly. Keep in mind, I've been following this damn space religiously now for, 8 years, like every single day. In fact, actually, there's look at this. I still have Cryptopia here in the library as a link. Oh, goodness. Somebody even sent me a PM the other day that there was a link to one of the, I think it's one of Paul's spreadsheets that we added. That's actually an incorrect link. I have to fix it. So I haven't forgotten about you. I remember somebody sent me that message yesterday. But anyway, it's kind of funny how I still have Cryptopia on here. I noticed that. And has anybody gotten their money or any kind of response from that Cryptopia bankruptcy? I haven't heard anything back yet. Anyway, okay, so what did I want to show you? I wanted to show you the news feeds. And actually, where I probably have it better is up here. Crypto, yeah, this. Now, I appreciate you want to be in on the know, right? You want to be the first guy to know what's happening. But I'll tell you, you just constantly being blitzed headline after headline after headline after headline. This isn't really in your best interest. It's perfect for like the crypto degen who's sitting there 24/7 watching their screen religiously, all that kind of stuff. And if you want to be in on the inside, but for somebody who's sort of relatively new to trading, relatively new to this whole sort of investment game, I'll tell you, something like this is just going to feed that FUD fire. And the irony of it all is, you never really know what the hell's going to happen in this game of investing. Don't kid yourself, okay? I hate that about the public is you got these guys who say that they're gurus and they know exactly what's going to happen next. And it's not the way the universe works. What I would just simply say is this is a situation where if you see a big fat W, let's see if I can find the darn tool I'm looking for. There we go. Right. And you just say, that Beamish guy, and I've kind of come to learn it. He says, I'm going to buy the W and I'm just going to risk to a break of the bottom of the W. And I'm going to force myself to take some profits at 2-to-1. There's 2-to-1 level. So what do you think the odds are that Bitcoin trades up to that 2-to-1 level? Ironically enough, I'd say probably pretty damn good. And this trade's just working away. We know that W's work about somewhere between about 60 and 70% of the time, which means that they, by definition, are not going to work a good 30 to 40% of the time. But when they do, and if you force yourself to have at least a 2-to-1 risk reward, you are a profitable trader. And that's all this is. It's a trade setup, and it's just doing its thing. Is it in your best interest to say, I expect Bitcoin's going to go to this specific level? I make a prediction. I'm going to bet my career on that one bet. That's never a good idea. Never, 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 never. So anyway, I hope you get the message that the way that this FUD is specifically designed to get you to act emotionally. And the easiest way to tune it out is to do that. Just tune it out. Turn off whoever the speaking head is. If you see weekly W's, well, that's the basis. I keep telling all the level oneers, that's the absolute basis. And then once you see the weekly W's, if you're long, if you're short oriented, you see weekly M's, oh boy, that's a big, nasty negative sign. But if you are bullish, which most people are, like 80-90% of people that play the market long, not short, then, you got to just tune this shit out, and you have to wait for the weekly W's. Then if you're going to take the weekly W, then it better be like Joe Sixpack or little old lady like the sushi trade I showed you. Or if you are more higher octane, great, drill down to lower time frames and hunt the W's off of those levels. And just, build your 3 unrelated reasons to justify acting, and then act appropriately, take appropriate risk based on what type of risk taker you are, and just live with the results. And whatever people are saying in the public, it means nothing. Even a clown like that Beamish guy, whatever he's saying, it's edutainment, it's fun. But if it's contrary to my trading plan's more important than what the hell the Beamish guy's saying. Anyway, I hope you got that message. How do you deal with that? Well, what I just said. Do you ignore it at all, and you only trade the chart? Not the chart, trade the plan. It's the plan that's the most important thing here. What does your plan say? That's what if you are a bot trader and it's not a valid bot, then you got no business being in the trade. If the plan says that you trade bullish bots following a confirmation of a bullish trend, say off a weekly price chart, big fat W, moving average crosses, then I don't want to see you trading bullish bots in a bear market. It's what does your plan say? Fantastic added value for TRI to have this AMA in besides Sunday and to listen to the perspective of great veterans from time to time. Good weekend. Yeah, actually, well, you're lucky I did this on a weekend show. So there you go. But you're absolutely right. All of this stuff is just nothing more than just to feed your emotional side. And ironically enough, I don't think anything's actually happened to that Silvergate. In fact, I might even go buy some stock. The irony of it all is that Silvergate was ridiculously overpriced. It just had to come back down to earth. And mysteriously, actually, it turns out we didn't lose all those billions. They just found them. They were sitting over there in the corner. So the whole thing was a fraud to get me to panic sell my crypto. Yep, pretty much. Jerks. All right, so I hope that helped with that question. And we do this basically through the week if I run out of time here. Still got 50 minutes left, but then I have to head off to Lily. He doesn't wait for nobody. Okay, so Francis says, hi, Brian. Throughout 22, I kept hoping BTC would hit sub 12K range. And the irony of it all, I think that there were too many people in the public, and especially the Beamish guy, keep going. I want to see that sub. So, with that many people just sitting there waiting to buy, and they weren't willing to buy, what a surprise. The market's not going to come down to that level. Remember, the market is designed to inflict as much pain on as many people as much of the time as possible. And if anything, I almost get the impression that, as the market was going down, people are actually like, hey, maybe this Beamish guy knows what he's saying. Right? And he's like, cost of production's below 10,000. Don't touch it. Don't touch it. So, okay, we got to somehow make this guy look foolish. We know that the value, quote unquote, is sub, 12,000. But at the same time, too, we got this seasonal trade coming up here, and we got to make some money, So what are we going to do? And of course, we got brand new venture capital season, so that we know that there's going to be a ton of money that's going to come in on the buy side through that venture cap window. And so they put in a bottom just above, and of course now they've got you second guessing your plan. Now you're going to actually seriously consider chasing. Okay, it has now made a weekly W on the right side of a trend line. Yeah, we talked about that earlier. Have I missed my chance to get in at the bottom, quote unquote? Well, I mean, as I had said earlier, at any given point in time, you should expect 38.2s. So, and this is half of the reason. Look at that. We've actually gone and M'd out here. So I get the impression more that this is sort of like 2015 scenario, where can we show you this? I guess we can do it over here. Well, it's just like interesting. This is what I thought was going to happen. But oh well, who cares? So 2015, the bottom looked like this, and this is what I think is going to happen here. Is we're down, we're up, 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 woo! And just a whole bunch of back and forth through. Notice here is the beginning of 2015. Here is the end of 2015. Right there. So I think that your 2023 is going to look something like that. Up, right out of the gate, January, we're down. Now we're like big rally up, then down, then up, then down, then up, then down. And this is what I think, and you're just asking my opinion. I mean, do I really know for certain? Absolutely not. Nobody has a crystal ball. But this would be interesting. If anything, Chris, it might be a good idea to sort of bookmark this. And we should see into sort of August through end of October, beginning of November, this down move. And this down move, I think, is the quote unquote bottom. I think right now, you might even argue we're sort of like right here right now. So if you come in, you're going to be buying. If you look back in hindsight, again, this is what type of risk taker are you? If you're a little old lady and you're just accumulating through here and we do this over the next 2 or 3 years, are you going to give a shit whether you are at the bottom or not? And we do something like this, you're not really going to care too much. However, in the short term, if you're in some circle jerk room where you guys are all watching the charts like 24/7, and actually, I don't think I can go back on a 1 hour chart that far, maybe 4 hours. Can we go that far back? And this is kind of what I think is going on right now. Come on, you a little bit further. Oh, okay, good. A little bit further. Come on, baby. You can do it. You can do it. Oh, are you going to stall out? It's going to stall out somewhere in here. Oh, there we go. Hey, we got it. Cool. All right. So this is the kind of environment that I think we're in right now, where, the fall, this was the fall of, if you relatively speaking, this was the fall of 2014. This is the fall of 2022. Again, interesting money cycle. I'm a big fan of 80-year cycles. This happens to be 8-year cycle. Interesting coincidence. Anyway, so 8 years fast forward. you can see almost exactly the same thing. And I think what we're going through right now is this, where you had just sort of capitulation bottom to a certain degree with all that FTX stuff. And we're just getting literally dead cat bounce moves straight up. Interesting, the pullback here put in nice W's, which set up a trade, which put in M's, which brought back down, put in W's, and basically another M, and then W's. So I get the feeling that right now what they're doing is they're actually establishing the trading range for this coming year. And as I said, I do like the narrative that they're going to get the US government to panic, and they're going to get all the sort of newly elected representatives, after they've got them in power a good 8-9 months. They'll say, look, we fought the good fight with their constituents, and look what we did to Janet Yellen. We caused her to freak out into the summer and the fall, and we've achieved about everything that we can. Where exactly Bitcoin is, are we at new lows down into that 12,000 area, or do we just come down and test the lows that we put in recently? I get the feeling they're going to take it to new lows, but like I said, somebody bookmark this and we'll come back and watch it in the fall. But that's kind of what I'm thinking this year is going to look like. So I don't think it's a good idea to chase. It's never a good idea to chase. You always come back after the fact and you're kind of like, oh, God damn, why did I do that? We know that the Fed, they've crapped on the market before. And I think that will be the catalyst that's going to start whatever this next down wave is. I mean, I don't know what the hell this looks like. Maybe something like that. But whatever the next sort of down wave through February, March. If I understand correctly, Vladdy's planning on starting some sort of massive invasion of Ukraine again this winter. So that's coming down the pike. And interestingly enough, the market itself, they always say that it's not, like if we look at the stock market, it's not a good sign if you see the stock market actually getting bid up into Fed events, because it's like a buy the rumor. We're hoping that they're going to be friendly. And yet they've publicly said 2 or 3 times that they haven't done, they're not done raising interest rates. And we might get another sort of after the fact sell off, pull back into following that event. That's kind of what I'm thinking. So anyway, it is what it is. So that's my answer. And keep in mind too, it's just an opinion. That's all it is. It can't be anything more than that. I don't have a crystal ball. I don't know what the fuck's going to happen. And so you say here, at what point when you consider the bear officially over and we're back into the bull cycle? First and foremost, we're not back into the bull cycle until we are on the other side of the upcoming halvening event. So that doesn't happen for quite some time. We go back to even like a weekly chart, right? I mean, that's your weekly W. I got to say, that's a pretty weak, that's a pretty weak weekly W as weekly W's go. You kind of go, yeah, technically it is, but I don't know. That's kind of wishy-washy. If anything, you can almost kind of see that this kind of looks like a shoulder, neckline, head. We'll probably go neckline, shoulder, something like that. That's probably what's going to happen here. But, who knows? It's just speculation. But the next halvening event in seriousness is not till like way out here, right? Something like it's like May or June of 24. And our rule, kind of like what I showed you that last cycle, is we really shouldn't expect for this thing to really start trending higher until about 6 months prior to that. So that would be somewhere in that November area. So I really like, and keep in mind, like we said earlier, at any given point in time, any market, anywhere, you should always expect a 38.2 bounce. It's just what markets do. And if anything, this makes sense because all we're going to be doing is just rallying up, brushing against this original market structure fail level. There's nothing really rocket scientist out of that. And until we resolve 38.2, we're still in a bear. This has to resolve, and then you can say, all right, we officially now have a new bull trend to work with. So is that a really powerful W? I don't think so. I really don't. And interestingly enough, I'd be curious to see what the moving averages are saying here. Yeah, moving averages are still actually pointed bearishly. You can see in the short term, remember I showed you that head and shoulders kind of thesis? You can kind of see how the 200 SMA here, and it might even be like a billiard ball theory kind of bottom, but you can kind of see how the 200 SMA, it's going to act as significant resistance here. And that would just basically be like a neckline. I would be shocked if we could punch our way through that. I would be really shocked. Anyway, we'll see what happens. So I hope that helps answer that question a bit. And I don't think that this happens until probably the second half of this year. Enjoy the nice little rally. And like I said, on some of these shit coins, people are banging out doubles right, left, and center here. So, hey, make hay while the sun's shining. Okay, number 2. Hi, Brian. Working through the horizontal support and resistance study, and I'm not sure if I'm highlighting too many pivots. You can never highlight too many pivots with that. What I would suggest, though, is be religious. Dailies, one color, one thickness. Weeklies, one color, one thickness. 4 hours, one color, one thickness. And then that way, when you zoom in and out, you can see the respective levels and sort of put them into context. And what you're really looking for is clusters. So if you do have a whole bunch of lines drawn, when you zoom in on like a 1 hour chart, you should see those clusters. They should like really jump out at you. Okay, I'm currently working on a weekly Bitcoin chart. Can you look at the exams? Tell me if I'm doing it correctly. I'm missing any key pivots, high lows, chance of direction, and any consequence thing. Okay. So that's a good start. Perfect. You could have done one off of here. Now, this is a weekly chart. What I suggest is make this the thickest of the lines, because the higher the time frame, the more important the level is. So make these the thickest and make it its own color. Now you missed this high right here. So you could have done one off of that high right there. You could have done another one off of this low here. You could have done another one off of that low there if you wanted to. You could have done one off of that low there. You could have done one off of that low there. It could have done one off of there. Could have done one off of that over there. Could have done one off of that over there. Could have done one off of that over there. Could have done one off of that over there. Could have done one off of that over there. Am I sounding like a broken record? Am I sounding like a broken record? Am I sounding like a broken record? So actually, I mean, this is a good start. Totally awesome. Have you done too much? No, if anything, you've done too little. Now, what I would say is if you see them on the weekly charts, and clearly like this one right here, that is a level you should have had marked. And what you should see, and maybe you did, I see, okay, so I just see one line here. You could have done another one off of that level there. And then, you could have done one off of this shooting star high here. Could have done one off of that high there. And if you could have done one off of that high there. So that high there, that high there, that low there, that low there, this low here, you would have clearly seen there would have been a major cluster of horizontal support and resistance levels right off this 40,000 level. So this is a good start. Nothing wrong with that. Post it in the lounge. I would expect you to go back years. So you could have done one off of that level there. You definitely could have, hell, you could have done like a monthly off of that level there. Could have done one off. Why didn't you do one off of this low there? That wicked, it's almost like a doji candle. Could have done one off of that level there. That's a huge one there. You could have done one off of this low here with this low here and that low there and that low there and that low there and that low there. Holy crap, this is a huge horizontal support and resistance level. So whoever asked this question, DBC, if anything, just watch what I did. go and dude up a chart with all of those levels that I showed you, and then repost it. And, next week when I scroll back, put like a big asterisk or bold or something, and I'll go back and look at that chart and give you my 2 cents of that. All right, number 3, Bitcoin could have the weekly 50, 200 death cross. Actually, I saw this was funny. Now they're calling it the super death cross. I don't know if that works. So you forgot, you got to put it here. This is the super death cross, right? And this is kind of like, you remember Animal House, right? They're not on probation, they're on double secret probation. So yeah, it very easily could. The market will do any old damn thing that I want. Now, the one good part about Bitcoin, listen to me. The one good thing about Bitcoin is it has this built-in halving event. So in essence, the whole fundamental metric of Bitcoin gets shifted once every 4 years. So that's the one good thing about Bitcoin and that's where it sort of becomes this rise-only market. So if we go weekly, and then we're going to put on your super death cross. 250. I also noticed too that they were using exponential moving average. Tisk, tisk, tisk. You are not supposed to use EMAs. What the fuck's up with that? So if I look at the SMAs, no, I don't see it. So this is the hardest part about doing this TA is the guy who did the video, and I saw somebody had posted in the lounge and stuff, and I mean, like, he's an older gentleman. He sounded pretty reasonable. I'm sure anybody watching his video is kind of like, this guy sounds like he knows what he's talking about. But I was actually a bit surprised. If you look at this from an SMA relationship, there is no cross there. So I don't know. I'm a little skeptical. I'd also say too that, as we kind of pointed out earlier, what I think has to happen here is any of these markets that are thinking about bottoming, any of these assets, it's quite remarkable. They're all pretty consistent. Whether it be you want to call it a fractal, that's fine, call it a fractal. In fact, actually, a perfect fractal would have 5 levels, not just 3. So you want to do something like that. That's perfectly realistic as far as I'm concerned. What I would just simply say, and what I often tell people, is that these bottoms should look like saucers. They should have like a symmetrical feel to them. And if you look back in time, right, hopefully you can see this. When you look at this image, it looks kind of saucery. Right? Something like that. You might even say that this is like shoulder, head, shoulder, and your neckline somewhere along there. Point here is that this is saucery. And then the last cycle beforehand, same sort of thing. These bottoms, they take time, but they look very saucery. I don't know whether that makes any sense or not. Maybe not. Also, too, that same sort of inverted head and shoulders kind of thinking. You see something that looks along those lines. All right, that saucery look. I tell you that's actually a really good sort of Google short. What do bottoms look like? Well, they usually look like these saucers. You can draw out the head and shoulders tool, the fractal, to help you see that saucer. But that's usually what bottoms want to look like, is that saucer in nature. So can you see how we just haven't spent enough time down here for that saucer to have fully developed? Does that make sense? Can you see that? Can somebody just tell me? My approach was to become a Tibetan monk and to stay focused. All right. Actually, if anybody would be a good Tibetan monk, I think you would be it, Josh. All right. Nick's off talking about something else. Anyway. So I hope you can see this saucery bottom kind of nature. Yeah, I mean, don't we all, right? Hey, there's the Matador. I gave you a shout out for your list. Your list was que bella. And this is exactly, this is 1 + 1 = 3. I'm not necessarily going to go and buy, but I just simply said to the community, hey, does anybody see any weekly W's? And the Matador is like, yeah, here's my list. Boom. Merry Christmas. This is it. This is 1 + 1 = 3. I'm not here to sell you, hey, you got to buy this name because I was given 100 million of these coins ahead of the financing and I've got a completely conflicted best interest. And I really want you to go and buy the coin so the price goes up so I can go and buy my, Lambo or whatever. We don't operate that way at TRI. I mean, I ask you for your list because if I see a name that meets all my criteria about buying weekly W's, I mean, you guys want a weekly W to look at. What do you think of that one? That looks beautiful. I mean, it just looks absolutely textbook. If I can get this kind of rally, I'm made in the shade. I'm not looking for a new bull market yet, but oh my goodness. I mean, that's you know what this is? This is, I don't know if I can find it. When I saw this chart, I think it was Friday, I pulled it up. The very first thing I saw when I saw this was I thought of this guy. This is how a bottom is supposed to be. I mean, that's so perfect. I'm probably going to get a whole bunch of copyright things and stuff on that. But that's exactly what a bottom is supposed to look like. That's what I want to be buying. And there it goes. Interesting how it banged into the 200 SMA. It's a death cross. It's not a death cross, it's a super death cross. I love that. That made me laugh. I gotta say that did make me have a nice chuckle. So I don't know. I mean, granted, it's still a young asset. From your experience, when this happens, it's just retail meme, lagging indicator, powerful, does align awfully conveniently with Fed announcement. I think I've said repeatedly here through this broadcast here today, I'm not subscribing to this is a new bull market, rah, rah, rah. We're all going to get stinking rich here tomorrow. I don't think we're at that stage. If anything, I do like the fact that both of these moving averages are painting that we get up into this sort of 24, 25,000. And what a surprise, 25 G's, that's a nice big fat round number. Psychologically, it would make sense that Bitcoin plays around at 25 G's. Well, that wouldn't surprise me. So I like the idea that this is resistance, but I don't think that this is actually, and keep in mind, this is like weekly charts. These are like, this is a 200-week moving average. This thing's going to move slow as molasses. Could we get rejected off of this tag here? Sure, I would actually expect it. Having said that, don't be shocked. I mean, I don't think it's in our best interest to get into the business of predicting the future, but I definitely think, actually interesting. Now that's an interesting image. I definitely think it's in our best interest to understand that things like 38.2s, they get tagged all the bloody time, and counter trend rally up into this level off of this low. Business as usual, nothing really out of the ordinary there. All right, well, I hope I answered that question. I don't know whether I did or not. That was funny though. The super death cross. And I don't even think he got it right. That's so funny. He's mixing his EMAs and his SMAs. You're not allowed to do that. All right, number 4, Nicholas. Hey, Brian. Thank you for your videos as always. Oh, you're awesome. I have been trading the bot, the one in the library, and I have some questions. I have noticed that in low time frames, I would imagine, I got stopped out most of the time. Yeah, it does happen. Especially, I don't know what asset you're working with. If you're working with like a, even crypto for that matter, I mean, it is very venture capital. But in 4 hour, it usually works. Okay, that's good. Would you mind sharing your thoughts on this? Yeah, so I would definitely, if you're trading big futures contracts like crude oil, well, lower time frames, fine. They're liquid. There's lots of participation. In fact, I used to work with a guy who used to say that I wouldn't trade an options contract unless it traded at least 2,000 contracts a day. Anybody who trades options with me knows 2,000. Holy crap, that's a lot. So it's definitely contextual, Nicholas, on what asset you're trading. Absolutely. And then if you go down the food chain and you start trading like shit coins and stuff with the bot, you got to understand that, off a 15-minute chart, it can be just chop Vegas. And often they even set up liquidity traps. There is this debate as to whether CZ on sites like Binance actually goes after retail orders. They did openly admit that they have like chat networks between the exchanges. And I definitely think, without a shadow of a doubt, that that Sam Bankman-Fried guy and the poker guy, who actually has a history of running God mode software on retail customers, I definitely think that they, were basically playing completely illegal in classic legacy like stock markets and stuff like that. What they probably were getting away with would be like life sentence in jail kind of shit. But because crypto is unregulated and because of all of you are so trusting, and they can get away with this criminal activity and it's no big deal. I have never seen CZ himself actually caught, but I have, of course, Crypto Chico. He will go on at length about how unscrupulous these people are. So if you are trading lower time frames in crypto, you have to understand that there is a very real possibility that they are actually, not only are they going to go after your stops, but they actually painted charts to look certain ways to get you to act, which is terribly, it's just terribly terrible. It's like the bulletin board down in the States. I used to tell any retail customer, in fact, like in Canada, like it's even illegal to trade on the bulletin board for Canadians. But I used to tell retail customers, when you were allowed to trade on the bulletin board, that, they have no legal obligation to tell you the truth whatsoever. And they don't. So just understand what you're getting involved with. So it really all depends on one market. If you're trading like the big futures contracts, which we do in the day trading room, I think you can go all the way down to like 5-minute, even 1-minute charts for that matter. But if you're trading illiquid junior markets like stocks, warrants, options, crypto, you better be careful. And you also have to understand, in unregulated markets, it's a little bit even more difficult because they might actually be manipulating the price specifically to get you to act a certain way, which is horribly unethical, but it's true. That's one of the reasons why in the bot, it's critical that you have 3 higher lows or 3 lower highs. So you've got lots of institutional fingerprints to defend your trade. It's entirely dependent on whatever plan it is that I'm operating. As I said, I wouldn't trade an altcoin 5-minute bot that's asking for trouble. That 4-hour chart works pretty darn well. I would say 1 hour, especially if you can sort of put the market into context. If we're in a runaway bull and you see volume pouring in, and it's heavy volume, then it's harder for them to manipulate assets. If you're buying bots that are in very low volume, that's usually when they can manipulate price pretty easily. Won't do that here, but maybe on a Monday show or Tuesday, if you can ask me, maybe through the daily brief, I'll walk you through one. It'll just take too long to do it here. I got to get out of here in 20 minutes. Is there a bot trading room? Well, there is the day trader room. So I often, if I'm day trading futures contracts, we're in there. We call it the battle stations room. Then if any trade that I do in the broader market, I'll usually post in the Brian's Big Fat Bot room on Rocket Chat. But just remember that we're moving to Discord here pretty soon. So don't get too settled into Rocket Chat rooms. Everything's going to be thrown up in the air in the next month or two. I really want to master the bot, and would be nice if I can analyze some of the bot trades. Well, pop into the lounge and post the setups. And you can even at me. Just go in the lounge, post your trade, at me, and say, Brian, what do you think? Is this a half decent idea? And I'll be more than happy to work with you. You see how often I'm on the site. I'm almost there every day. Would you mind giving me feedback on these two trades I took and got stopped out? All right, let's see what you got here. So this is SOL. So 30-minute. Well, it's not a terrible idea. You are thinking long here. Now, you went long here. Not quite sure why you're going long there. I suppose 1 low, 2 lows, 3 lows. I believe it or not, actually, I wouldn't have a problem buying that. You got a risk to these lows, and boom, you got stopped out. One thing, remember I said earlier about volume. Notice through all of this, where's the buyers? The buyers are not really that active. I suppose you could argue there was a bit of a pump up here on this volume here. Would be interesting to see what your OBV studies does it agree. Also, too, not a bad idea to draw a trend line off of these peaks. And I think I might even want to draw a trend line off of that high and that high. So this trend line here was probably broken fairly quickly. Then you could do another trend line off of here. And, believe it or not, I wouldn't fault you if you bought this and you bought here. So you saw the breakout here, and then you're like, all right, I'll take the first fractal bullish signal that comes in. It ran up, and then you got stopped out. Yeah, not really that big of a deal. You did start your drawing here, so that's a bit interesting. The levels that you've actually drawn on here are kind of backwards. They're not really correct. I might have drawn like this high back to this low because there's the original double bottom. Did that do a 33% correction? I don't know. But on balance, I wouldn't have a problem. If you had bought this and said, yep, got stopped out here, I would be like, okay, well, not really that big of a deal. A couple things to think about, like did we actually W on other side of trend lines? And what are your indicators suggesting? Are they supportive of this trade idea? Were they in divergence? There's a couple things I might add to that. And then this one. SOL again. Keep in mind, this name is highly suspect right now. Hey, this is an SBF name. So I've heard a lot of people kind of say, you know what, I'm just leaving that stuff alone. So is there shenanigans going around this SOL? There could be, All right, here you've got, so now you're thinking bearish. Now the 30 minutes. So interesting how you flip from bullish to bearish to bullish to bearish. I might even suggest that you try and look at the higher time frame chart and just sort of frame your behavior on whatever that signal is. Going from bullish to bearish and flipping back and forth, you're going to kind of drive yourself crazy. Well, now this is a bearish one. So boobity boo. Did we do 33? Yes. Did we go beyond 66? No. Do you actually have 3 lower highs? So this is very aggressive. I don't like the look of that. Too aggressive. Remember, you want to think about a grade 3 English teacher. So that means you want your W's to look like W's. You want your M's to look like M's. Ideally, in this kind of scenario, what you really want is you want that. That's the best scenario. So this high and this high are pretty close. And then you got another little high right in here, which creates your 3 lower highs. That's the best scenario. You kind of want to avoid that. That's not really, it's too aggressive, in my humble opinion. Now, I might even argue that this in itself is a little bit of a bearish bot. So you could have gone here to here, counter trend rally, and then, really drilled in down lower time frame shooting for that. And my hunch here is that probably here to here and there to there, your target was this level right here. So I don't really like this M. I don't like this at all. No, I don't like that at all. No. Nope. Sorry. Oh my goodness. Oh my damn. All right. So Nicholas, in the lounge, at me, show me your bots and I'll give you my feedback. All right, last question here for today, and then I'm going to head off and have an afternoon with the boy. So Ryan asked, hi, Brian. If someone is dollar cost averaging into an asset to hopefully take profits down the road and not in an active day trade, should they have a sell order working just in case the asset suddenly doubles in price? I'm new to the site and I'm confused about setting sell orders for assets you're accumulating when the position size is changing over time versus sell orders for active traders with fixed position sizes. I would say the answer is yes to it all. And this is kind of where we get into this document, like, what is your tactical plan? And there's not really a wrong answer. Are you a buy and hold person? So, that's ease of management, little room for error. Keep in mind, errors is actually usually how we screw up in this game. Relatively minimal tax implications, going to get a solid return on my money, but I'm not going to really be that active. I always think that it's a good idea to try and get into that risk-free trade as soon as possible. At the same time, too, given the propensity for Big Brother to shit on all of our heads, I think it's super incumbent on you to not only double your money, but maybe make it even a bit more. So then that way, the bit more you put off on the sidelines, and that is for the tax man. So that's going to be the plan that I'm going to be running over the next 35 months to try and demonstrate how you also make the tax man happy. So in that particular case, sometimes it might mean that you miss doubles. I mean, I'm not going to bullshit you. And nothing's guaranteed in this game whatsoever. Nothing at all. Don't kid yourself. So we're out there all just trying our best. On something like this, where is Zugi's awesomeness? Because I think Zug's story is a pretty good idea. Where the hell is it? I probably went right by it. There it is. Yeah. So like this kind of name, I'm long from down here. I mean, technically I could sell up here, but I'm not really in a hurry. This is such a beautiful story. If it takes me into the summer to get a fill, so be it. I don't see any reason why this 2.618 can't get hit, and that's where I'm going to be selling half out on a double. This will give me definitely more than a double. And I'll figure out my tax implications on that sale. put that money aside. I should be able to get my original invested capital back because this is going to be like, a triple. And then I'll take the free coins. I will put them on like a ledger or something like that, take them completely off the exchange, completely forget about it. And then once I have my original capital back in my hands, I'll start drawing reload zones. And you can see if this happens to be the top here, I didn't actually buy that much of this. I'm more than happy to buy more of it. If it does happen to dip right back down into the bottom, more than happy to buy more. But as you can see, I've got my sell order way up top here. Now you don't necessarily have to work an order, right? You could be like, well, Brian, I'm busy at my regular job. So all I'm going to do is I'm just going to put an alert on that level. So boom, there is now my alert. The computer will go off. Maybe you're busy at work. Keep in mind, these crazy crypto stories, it very rarely do I ever see them make blow off tops that are sort of polite and simple and quiet. Usually the blow off tops are absolute insanity. So as I had pointed out on this one, believe it or not, I actually think we're going to work our way up into here. So, you start seeing the thing start to move and your alerts go off, then you can, if you want to buy this assets and then take them completely off the exchange, which isn't such a bad idea, the alert goes off. And so then, okay, I will move half of the position onto the exchange. I will liquidate at market as soon as the asset gets to the exchange. I've set the order and the alert level well above my double level, so it's not really that big of a deal. And if I've missed it because it's just the way it goes, well, then that's the way that it goes. But as you can see, I'm expecting this thing to do quite a bit more than just this level here. And there's nothing wrong with that. There really isn't. You are going to have the occasional case where the damn thing goes straight up and then straight back down, and you're going to get all pissed off and angry and stuff. And if you missed it, well, that's the price you pay for not taking the chance of having the asset on the exchange. There are pros and cons to all of this. I mean, hell, if you're dealing with enough money, maybe hire somebody that you trust, maybe like your kid or something like that, or your wife or something, and just say, look we'll even create like a little cell phone, and it will just have the list of TradingView things. And when that damn cell phone starts buzzing or humming or whatever, one of the guys in the day trading group, he actually creates a soundbite. Every once in a while we hear plus 1,000 in Justin's voice, and it's so funny because he's following the tick. But I don't care how you're going to set your alerts up. You just got to do it ahead of time. And if that get really good at moving your assets between exchanges, it's up to you. I'm not going to say that there's a right or wrong. What I'm just going to simply say is there is opportunity cost. You want to maybe buy the asset, move half of it off of the exchange, and you have no intention of ever selling that other half, and then just leave the open order to sell whatever you have remaining on the exchange at your crazy ass 2-to-1, 3-to-1, 4-to-1 levels, and just let it work. Yeah, you're going to have to take the chance of, number one, having to renew the orders. Number two, does the exchange even survive? And trust me, now I've been through it. Cryptopia blew up. We had an exchange there. Poof, gone. I wasn't in Gox, but Gox did what Gox did. Quadriga, oh my goodness, lots of people got destroyed through that. So to say that these exchanges are not going to blow up, that's obviously taking a very large leap of faith. So it's really a question of how much time and effort do you want to put into this? Do you want to take that risk? There are ways to, the interesting thing is they always say that there are risk mitigation strategies. You're never going to be able to get rid of risk entirely. It just isn't going to happen. But there are ways to sort of reduce risk. Obviously, when it comes to crypto and moving coins off of exchanges onto ledgers and stuff like that, then there is that time issue. And then, as I had said earlier, if you want to take the multi-car approach, well, this is definitely being far more active. It means being more trusting of the exchange that you happen to work on. Maybe just leave the amount of money that you are going to work on the multi-cars on the exchange, but don't leave anything more. And anything that's surplus, just get it off of the exchange. So I'm not going to say that there's a right or wrong way to do this. Obviously, with the multi-car approach, it's going to require a lot more work. It's going to require a lot more order and management effort. No sense in bullshitting you. Yeah, it's going to be a lot of work. It's up to you. I mean, I'll tell you, the buy and hold strategy, I think I had pointed out on my Twitter feed, that little thing that I have up at the top of my page. If you took the buy and hold strategy on this little plan that we did, you came out at 503%. Well, that's not bad. That's 5x your money. If you do the multi-car, sell half on a double, reinvest the money, the plan came out at 2,700% return. And that was just at 100 G's. Keep in mind, this silly thing topped out at like, I don't know, 600,000 or 700,000 or something. So you do more work and more effort, obviously you're going to get a higher payout. It's just common sense. So I hope that helps answer your question. It's not really like do this and you win, do that and you lose. It's more like, well, there's trade-offs for everything. You're going to do more work, obviously you're going to get more reward. You do less work, you're going to get less reward. You might even have more risk involved with taking a chance, just leaving your assets on these exchanges. It's definitely a realistic possibility. Okay, that's the end of the AMA for this particular session. I thought that was pretty constructive. We're right about 1 o'clock. I don't know. Did anybody get any value out of that rant here today? It was probably a good constructive session. There's people in the Hangout saying always. So you guys are my number one fan. Love you guys. Over on YouTube, did we get any positive working information? Hope you got something out of this. All right, somebody's saying thank you. All right, good job. Okay, so why don't we leave it at that? Of course, would appreciate all of your best wishes with regard to Liam and my adventure out in the great outdoors today. Good luck to all the new students who have joined the site and the program. I would recommend that you try and finish all 3 levels of the education program. I do not believe that your education is complete just finishing the level 1. I think it's enough to get very conservative people up and running and going, but I think I need to instill in you how important it is to have a complete look at the candy store. And if you don't, you're missing a hell of a lot of candy that you actually might go, I really love using gaps. And I didn't realize gap theory was so damn accurate, stuff like that. So, good luck in the education program. Slow and steady wins a race. Can't wait to continue to bring more presentations from our various site staffers of all the different value that different participants provide, given their respective places and sort of roles and jobs on the site and the markets that interest them in particular. Look forward to continuing to try and be a demonstrator of best practices for all you guys. I do like the fact that we have finally finished that year of meltdown. It seems to me that crypto, you can literally set your watch every bloody cycle we have to go through about a year of absolute crap. So thank God that's finally over. Jesus. I mean, it's remarkable how this was like literally exactly 1 year, right? Look at that. 363 bars from there to there. I mean, it's insane how consistent this is in this year, right? I mean, it's remarkable how this almost is exactly 1 year in duration, right? 409 bars, right? A little bit more than a year. So thank God we're finally over that crap. Now we can actually get back to, let's hunt some good investment ideas. Show me a half decent fundamental story. And by the way, if you can sneak your way into the bottom of these good fundamental stories, it's when the public is coming in and Remy's making videos about how easy it is to make money in crypto. And you've got people going, well, no, the rally will continue because this time it's different. Well, that's when we'll be ringing the register and going and buying our islands. But the point is, as I've repeatedly said on all of these darn social media posts, people, I mean, if you are serious about this, I mean, you can see that the bottoms are coming in. But the one thing you absolutely have to do is, do you have your shit together? You got to have it together. You got to be ready. You got to be willing. You got to be able. You got to know what your reasons are for acting. You got to know what type of risk take you are. By definition, that defines how you act. You got to get on this now. And how ironic, nobody in the public is going nuts like Brian is. This is perfect. I mean, if anything, it makes perfect sense. Nobody in the public is interested. Probably a good time for you guys to get interested. When Brian's freaking out and telling you you're all idiots, Sedona euphoria, that's when, of course, all of you guys are going crazy and buying up. And so that's the trap. So just listen to how Brian's talking right now. Look around you in the public. It should be obvious. Are you here to actually make money from trading? I don't know whether you are or not. Maybe you might just be a looky-loo. I don't know. But if you are, you got to get your shit together. And you got to do it now. All right. Have yourselves a good day. Thank you for the best wishes, Andre. Appreciate it. Thank you, Astra. Love it. Liam loves it too. Thank you, Andrew. Thank you, Cheryl. Love you all. Thank you, Constantine. Thank you, Adam. You are all awesome. That makes me feel so good. Thank you, thank you, thank you. And just remember, like, I work for a little boy. He is my life. He is my job. He is my future. And I love him with all my soul. So I shall go and try and give him the absolute best possible afternoon I can. PMA for the win. Hugs and kisses. Thank you, TBG. All the best. Mwah. And bye for now.